So going geographically, Uganda's the second biggest market.
16% of our NSV,
Yes.
about flat last year.
Yeah, a little bit soft. What were the reasons?
Yeah, so look, I'm not an expert on the region at all, but what I've heard, and what I've seen figures to substantiate it, is that Uganda's a highly cyclical market, goes up and down, up and down, up and down, and a couple of years ago, or a year or so ago, it was on a very steep uptick. Our business, similarly, Ali Khan, I think we grew in the medium to high 20% level last year. Had a fantastic year. In the last months, maybe 12 months, maybe 15 months, there's been a change in the arrangement, or in the donor arrangements in Uganda. I hear that there's been some pullback from the donors. They've been pushing less money into the country, and I'm not sure of the exact percentage, but quite a significant proportion of Uganda's GDP is actually contributed by donors. And the withdrawal of that money has led the economy to go into a slump. The withdrawal of that money has also led the government to have some challenges, and for it not to be paying its public sector workers on time. And that has an impact on our business, because public sector workers and their families and the people that they buy products and services from will see less money in the economy. So it's had a downturn impact on the overall economy. On top of that, we did do some stuff ourselves which probably weren't kind of well timed. So we put a new bit of kit into our brewery in Kampala, and that took a bit of time to install, created some supply disruption for us. And I don't think we were always as on top of the marketing programs as we should have been, and therefore we've got some work to do to make sure that our brands are as salient for consumers as they can be. Put all of that together, not a great year for us in Uganda. Moving forward, I've got very strong level of confidence in Uganda, very strong. So we kind of rebased our business last year. We took the hits, we've installed the kit into the brewery, we've invested heavily in understanding consumers, understanding our brand's salience with the consumers. We're investing in new programs for Bell Lager and for Uganda Waraji, which is an incredibly loved brand in Uganda, and rightly so. And the rest of our portfolio. So we've got Tusker Malt doing really well there. We've got Smirnoff Ice doing really well there. We've got other brands, including Senator, doing well there. And I think next year will be a good year for Uganda, or this financial year, actually, should I say.
Moving then third in revenue terms is Tanzania.
Yeah, about 12% of our net sales value.
Obviously you had that distortion, you had that one-off gain from the previous year, but looking at the organic business, how do you feel about Tanzania?
Yeah, so look, both Uganda and Tanzania I would characterise as being markets where we've got a big growth opportunity. In Kenya, we've got very high market share on beer. We've got moderately high market share on spirits. Uganda, we've got kind of medium market share. We're not the market leader. And in Tanzania, we've got even less market share. So we've got a lot more to go for. So in Tanzania last year, we grew market share, 170 basis points of growth last year, but off a relatively lower base. And when we made the strategic acquisition of SBL, we invested in that business for the long term, but also we like to combine long term and short term performance. And with the excise tax increase that happened right at the start of last financial year, 25% increase in excise tax in July last year. Plus we've been making some significant investments into the infrastructure of our Tanzanian business, put SAP into the business. We've put rolled Diageo standards into that business to make it set up for a real kind of world-class level of performance. Overall, that business didn't perform to my expectations last year, or to kind of the overall shareholder expectations. And it'll be a focus area for me going forward with Steve Gannon, who's the managing director of that business, to get that business really rocking, really growing gangbusters. That's our intent.
Now, I think there's one last group of countries we've got to look at. You call them EABLI.
Yeah, I also call them our export markets. I also call them the international and venture business, because that's a much smaller proportion of our business, 5% of our revenue, even less than that from a profitability perspective. Grew by 20% last year. So across our business units, Kenya 10%, Uganda flat, Tanzania 10%, and then LI was 20% growth. Our venture LI business, I should settle on one name for it, right? So our LI business, significant proportion of that business is achieved through South Sudan. South Sudan, as we know, a little bit like Uganda, maybe even more so. Kind of a bit cyclical, kind of the business, the economy is highly dependent on a number of factors, including whether the border's open for oil or not, whether they've got foreign exchange, other things. We had a solid year there last year, Ali Khan. So solid.
No, it's more than solid.
Yeah, and Jojo Bonnie, who's the MD of that business, was kind of, reasonably pleased with the overall delivery. I think there's more that we can get out of our new geographies. We've got very much a trading model at the moment into there. So we sell to customers, they come and collect from the brewery here, or maybe we make some deliveries, and we have a little bit of marketing investment, and we have a few people kind of on the ground there, but no kind of operating company, no kind of infrastructure there. We need to move over the next few years to have more of an established operating model, and we've got some plans during our F14 financial year 14 to start doing that. South Sudan is an obvious candidate, as is Rwanda, Burundi to a lesser extent because it's a bit smaller market, and then DRC again to a lesser extent. And what we're going to do is we're going to invest kind of slowly and certainly, and we're going to kind of establish a foothold and grow it, rather than we're going to go piling in and build a brewery or put up a spirits line. We've seen that happen, and we're not sure that it's kind of economically the right thing to do quite yet. So we're going to kind of tread a little bit carefully as we grow in those areas. But consumers like our brands across there. They like Tusker, they like Uganda Waraji, they like Tusker Malt, they like Smirnoff Ice, they like Johnny Walker. You could say, obviously, everybody loves Johnny Walker. So consumers like our brands. We're building the infrastructure, we're building the route to market in an established way, and we will. I expect to see good levels of growth out of the LI business.
Is that the limit of the geographical expansion?
Pretty much, yeah. There's been kind of talk in the past about Ethiopia, but our kind of Diageo, our parent sister company, kind of couldn't wait for us to be ready to do it, so they've taken a position there now. So I think for the next few years, Ali Khan, we're going to be focusing on that geography in Africa, East Africa, and maximising out our potential there. Now, as we get up a really good head of steam, who knows, what will become possible. But for the time being, that's kind of where we're at.
Great. Can I just go to like the product lines? I mean, just because we saw all this astonishing growth in reserve spirits. And actually that's following on from another big growth figure, because I remember being in Switzerland and Johnny Walker was up like 76% year on year. That must have been about 6 months ago, or the previous half year marks. So it's been sort of popping over the radar. Premium spirits, can you just tell us what that is? That is Johnny Walker Black, or is that Johnny Walker?
Premium spirits would include the vast majority of the Johnny Walker portfolio or range, from red label through black label. But when we get up to blue label and above, there's King George V and others on top, we reclassify that into reserve. There's also Smirnoff is in there.
Yes.
Gordon's will be in there.
Baileys.
Tanqueray will be in there. Bailey's will be in there. And actually, when you walk into a bar, probably the type of bar that you go to, walk into a bar, they should be the main brands that you and your drinking companions would want to choose from.
You have good penetration.
People in a tailored suit and tie. Yeah.
Just because you're not wearing a tie today. No. Then so premium beer also was growing at a much quicker clip than the normal beer, right? Up 16, up 18.
Yeah. So again, I think that's a window into the evolution of the markets that we're operating in. That there are more people with kind of you call them emerging middle class, or that have got much more kind of disposable income these days. And actually, kind of premium beer and RTDs.
Well, do you want to tell people what that is?
Yeah, so ready-to-drink brands are typically brands that have a full-strength spirit base. So, an example from our portfolio would be Smirnoff Ice, which has as a kind of a parent mother brand Smirnoff. And then is mixed with a kind of sweet carbonated mixer and bottled, ready for consumers to drink. And it's like a bar cocktail, but already done for you.
Somebody was telling me these are women's drinks, that actually they're targeted towards women.
Really?
Is that right?
Really?
Is that
yeah.
right?
You should take the person who told you that.
Is that wrong?
And I'll take you out around some bars in Nairobi, and you can see the person who said that, right? And we'll take that person, and when we see a big bloke drinking Smirnoff Ice, I'll take them. I'll take them up and say, do you know this person said that your drink is a girl's drink, and let's see what the reaction is.
I don't want you to do
so maybe
6'6" fellow.
yeah, so maybe not, but look, I'm kind of teasing a little bit. I think the ready to drink sector is participated in by both men and women, and then within that sector there are some brands which may have a more loyal female drinker base. So Smirnoff Red and Snap probably has a more loyal female drinker base than Smirnoff Black Ice. That said, men enjoy it. Men enjoy those drinks as well. And I wouldn't say that they're as kind of overtly female a drink as maybe some cosmetics products might be, or some other sectors would be. But of course, we're delighted to have female consumers as well as male consumers. And actually, Ali Khan, as Africa kind of matures from economically, female empowerment will grow. Absolutely. And women will become more kind of expressive of of their place in.
Because I was reading that it's quite an exciting market for people like yourselves, right?
Yeah.
There's a lot of potential in that area.
Yeah.
And it just seems some of the advertising was quite it was more sensitive. And I liked it.
Yeah, me too.
Now, so we know what we've been through this year. We showed growth. The growth story is intact. Quite a bit of volatility. You expect that in somewhere like East Africa, so you expect one to be up, one to be down. We saw a little bit of that. You've painted, just paint for us the future. What's Charles Ireland going to be doing here in the next 2-3 years? Where do you see this business being? What's going on in your mind?
Yeah, so great questions. So, what's my agenda, right? First of all, if I look back over my career, I have been most successful when I've had great people around me, when I've had a fantastic management team, or I've been working in a team with superstars. and that kind of works, right? You can quite kind of understand it.
Absolutely.
So if I can kind of use a football analogy, you could argue that Frank Lampard is the greatest midfielder.
You can tell you support Chelsea, right?
Whatever, right?
Yeah.
So I just pick a team randomly. But you could argue that Frank Lampard's the best midfielder in the last 15 years in the English Premier League. Unless he's got great teammates around him, he's never going to win matches on his own. You put him out on the field on his own against Manchester United or even Arsenal or maybe even Liverpool, he's probably not going to win the game 1 against 11. Having said that, you've got great team around him, he's going to do much better. I kind of believe in the power of teams. I believe in having great people. And
you have the team that you want around you.
Yes. This is a team that's made 15 billion shillings in profit, 59 billion shillings in revenue, 43 billion shillings in tax contribution. This is a winning team. Now, maybe we can sharpen up some of the ways that we do things, and maybe as people kind of complete assignments or they grow to such a level that we want to promote them and we want to move them into other countries in Africa or around the Diageo world, maybe there'll be some churn of people. But I'm kind of broadly happy with the team that I've got around me. We've got to spend money to train and develop all of our team to be able to be fulfilling their full potential.
But you've been the top employer in the last survey last year, I think,
Yeah.
right? So people do want to work for you.
They do, and attracting and retaining great talent, and then making sure that the business environment is set up for them to be successful is kind of key to leadership, and that is kind of where I'm going to be starting. Having said, after kind of Monday morning, but after that, obviously, making sure that we've got a great portfolio of brands which are relevant for consumers, work well together, again, like a team, work well together, is going to be another priority. So focusing on the quality of our liquids, making sure that they're available broadly in the market, distributed appropriately, is going to be another thing that I'm going to be working hard with the team on. And then I suppose the other thing is I'm a huge believer in systems and processes, and I have this kind of thought about systematise as much as you possibly can, because I just believe that once you've got all of your systems and processes really, really working well, you don't have to keep reinventing the same thing over and again, and then you can kind of get into some of the more value-adding areas of business. So I'm going to be working hard on our working capital management, our forecasting processes, making sure that our production disciplines are good, our route to consumer is good, our advertising and promotional schedules are well structured, and making sure that we're evaluating what activities we do and making sure we spend more on the ones that are really impactful and less on the ones that are less impactful.
Can I touch on two final items? I mean, you've been a very big CSR player in Kenya naturally, and would you like to tell us a little bit about, I know it's been very expensive importing a lot of stuff for the input into your drinks, and that you've been sourcing, and that there's a determination to source a lot locally.
Absolutely.
Do you just want to tell us?
Yeah, I'd be delighted to. I'm really, really proud, actually, of some of the work. Now, just as a route to get there, 254 years ago, a gentleman called Arthur Guinness set up the Guinness business in Ireland. And one of the first things he did was CR.
Wow.
250 years ago. So he put up schools for his workers, he put up sheltered accommodation for his workers, they had pension schemes, he put up hospitals, he made donations to the people of Ireland. CSR, you could argue, is part of our business's DNA, right back from 254 years ago. And therefore, it's probably not surprising that CSR has been part of what EABL has been about ever since we started, way back in 1922. Over the last year, we actually brought water to 1 million extra households in Kenya, 1 million extra
in
people in Kenya.
In Kenya.
997,000 benefited from our Water for Life program in Kenya alone.
It's also Africa-wide then.
Yeah, it is. I think it's brought something like drinking water to 7 million people across Africa in the last 5 or 6 years. We've just had our first initiative in South Sudan, actually. So CSR, part of our makeup. For me, the most powerful CSR activities happen when there's a confluence of business priorities and social priorities. And actually, EABL has been working with farmers for many, many years to source barley and other cereals. We have relationships with 27,000 farmers across East Africa. And we brought 2 new varieties of barley into the region last year that are more productive. We have moved our procurement of sorghum from 400 tonnes 4 years ago to 10,000 tonnes last year. And we have a huge program of moving to local sourcing across each one of our territories so that we can, even to an even greater extent than we have been in the past, bring more economic vibrancy to our areas. So our local raw material sourcing ambitions are high, and I expect that we'll be doing even more work in that area over the next 1 to 3 years.
Excellent, and I think you're well known for that area. So, finally, I just want to come to the share price. And if you don't want to comment on it, you don't have to. But obviously, we had quite a volatile year this year. Got as high as 423 at one point, and I think that was off the back of the quantitative easing, pile of money probably coming in. Given the price now, it seems to me, given the performance the last 2 days, post the profits warning, that we've found an equilibrium. Do you feel comfortable with where the price is now?
Yeah, I'm a businessman, not a stock broker, so I'm probably not best qualified to talk about it. I think the market will find the right level for EABL stock. I think that overall, what I hear is that investors are looking for companies which are setting themselves up for long-term success. Now, I've met with a bunch of investors who have who've told me that they like EABL because they think EABL is strategically placed and will give them long-term growth prospects. Now, I certainly know that Diageo has invested the amounts of money that it has in this great business because it's into East Africa and Africa for the long term. And I suspect that many of the other institutional investors are as well. We've also got 29,000 local investors as well. And many of those are kind of smaller in nature and are really interested in EABL stock because it's been a long-term kind of income generator for them. And we're very respectful of that. So the dividend that we're paying out this year is about 63% of PAT. We have been higher than that. I think we've been up to 77% in recent years, but 63% is around our kind of long.
Is this where you're going to stay, do you think?
Well, it depends. Well, excuse me. I think as an informal policy, probably somewhere in that range is probably likely. The last business that I ran didn't have as greater kind of future investment opportunity as EABL has, and our informal dividend policy was 95% of PAT. So I have been used to higher dividend levels, but I think whatever the range is, we will work really hard to make sure that the payout range is appropriate to the business, that we're looking after the shareholders' best interests. And if it's 63% of a really big number, it's a lot.
Yes.
And if it's 63% of a reasonably big number, then it's not that much.
Yeah.
And therefore, kind of my orientation is about, as I said before, growing kind of volume at one level, net sales value at a higher level, and profit at an even higher level. So for me, my core is about growing this business. It's a great business already, and I want to take it to the next level of growth rate. And when we do that, you know, the funding opportunities kind of become easier. The choices that you've got to make about paying out or kind of internal funding or whatever it might be, you know, the decisions that we have to make are easier decisions, and you know, I hope for shareholders' support.
I'm sure you'll get it. I've been to a lot of your AGMs, and they're rather grand affairs, and people come from all over Kenya.
I hear they do.
29,000.
I hear that there's a lot, maybe not all 29.
But quite a few of them. It's quite an event, and I like getting there early and seeing everybody come in. And over a couple of times, you know, you've got this very loyal shareholder base. And I actually talked to some of them, and some of them had received it from their grandfather, some from their father. They never sold it, collecting the dividends and extremely satisfied. But what was coming out of there is that one share is now trading at around 312 or 313 shillings, which is about $4. And here there is this quirky side where people like to have more shares, even if it's at a lower price.
Yeah.
Can I throw one last question as a parting shot? Would you split the price share? Is it about time to split it?
It's something we've looked at. We've looked at bonus shares, we've looked at share splits, we've looked at scrip issues. It's not something that we thought was appropriate for this time round. There's quite a lot of work to be done underneath all of those things. It's something that has come up in a number of AGMs, a number of queries from shareholders, and we're very respectful of shareholders' interests, and it is something that we'll continue to look at. I can't make any promises because there are some complications around it, but it is, you know, it's something that's kind of we're aware of. We've looked at in the past. We chose to not make a recommendation in that area this time round, and no promises for the future, but it is something that's on our radar.
And if you were to just encapsulate it all in a couple of sentences, what would you say?
Me to a couple of sentences. Goodness. Can they be long?
Yes, very long.
Look, let me kind of.
You said okay. It was an okay year.
I was going to say, let me kind of structure this. Looking back, looking forward. Looking back, a year of some challenges, some kind of the markets that we operate in, some of our own construct. Solid performance, but not as exciting a performance level as I've been used to in Asia, and maybe some shareholders have been used to. But you know, there's a lot. You know, I've been repeating some of the key numbers. You know, 59 billion of turnover, 15 billion of profit, and 43 billion of tax contribution. You know, they're big numbers.
Yeah.
You know, EABL is a big business and very steady. So there were a couple of kind of one-offs which distort the numbers, but you look at the core of the business, is a very steady business. Going forward, I want this business to be more exciting. I want the growth rate to be more in the exceptional bracket. I want to be repeating my last job. I think the CAGR was 13% profit, you know, over a 6-year period. We doubled profits and we tripled market capitalisation in my last job. I'd like to do that. You know, that would be nice, wouldn't it?
It would.
It would be nice. So you know, that's kind of what I'm here for. Outside of the kind of hard financials, though, I do think that EABL has got a role to play in helping Kenya and East Africa develop, you know, as an economy, as a meaningful part of the world. And I think the contribution that we make to, you know, the kind of business ecosystem, the contribution that we make to our employees and the employees of companies that interact with us, of their economic prosperity and their development. We've got people from EABL now working for the Diageo company in Australia, Indonesia, Singapore, across Africa, in Europe, in London, in I think Scotland, in North America. There's a lady who's working in New York. All of those people are gathering expertise and experience, and they're going to come back to EABL at some point in the future, and they're going to help this business grow to the next level. So I think having a well-developed people agenda where we're employing great people and we're creating conditions where they can do their best work is also a big thing for the future for us as well. And Ali Khan, I hope that in a year's time,
Yes.
you and I sit down
So do I.
and we can look back and we can say, so how was that year then? And I'll give you my honest report about how I feel about it.
I'm excited, and I appreciate the time you've given me today. It's been a pleasure to meet you a couple of times before today, and I look forward to that interview in a year's time.
Thank you, Ali Khan.
Thank you. Thank you, Charles.
Thanks. Bye.